You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 5th of February, 2018. We see markets decidedly down on Friday. The S&P 500 down 2.14%. Big down. Turned everything over. What we see happening on the price percent oscillator, it had started off the week flat, is now headed precipitously down, hasn't crossed over yet. The derivative oscillator lost lots of energy, still positive, but just holding on. We ended the week now with a red open box candle touching the weekly trend line. So a huge blow off of that upward energy that started back on the weekly vertical crossover all the way back at the end of September, beginning of October. Our jumping in point somewhere around a price point of 250, as high over the course of the prior week ending the 26th of January of $286.63. So we're talking $36, almost $37 up over that time period. But that looks like, at least for over the course of this past week, has been ending. We see, as we look at price movement down, we are setting up a vertical crossover going down on the 2-day chart. We're just the first day into it. It will end on Monday, but unless there's a huge upswing, looks like we will have a 2-day vertical crossover going down. The derivative oscillator has gained lots of downward momentum, and of course the price percent oscillator blowing through the red signal line. A big red down candle so far, actually penetrating the weekly trend line. As we look at the 4-hour chart, what do we see? Well, we see the day started off with a big down move on our average pace. That is a Heikin Ashi candlestick, and a even bigger down move in the afternoon, blowing through the weekly trend line. So again, derivative oscillator gaining downward momentum, price percent oscillator heading precipitously down. So keep your eye on things. Hopefully, those of you who've been in that up trade saw the warning bells go off when the 2-day trend line was penetrated all the way back at the end of the day on the 29th. Well, I guess that was really in the morning of the 30th, Tuesday the 30th, and you've not gone through these latest down moves. But again, for those of you who stayed in and did not let the warning bells send you astray, you're still way up with a beginning point of about 250. But of course, we want to capture the entire 286 or so. That's the most beautiful way to go. So hopefully you did see those warning bells that we talked about and pulled any trade that you had, any virtual trade. So we will keep moving through things. That's where we end the week on the S&P 500, and we look at the beginning of the week. We will keep our eye on the prize and just see if we do have that 2-day vertical crossover going down, if that actually is confirmed, and then see the effects during the week on the weekly chart and see if we start having a weekly, setting up for a weekly vertical crossover going down. Next, we go to the Qs, down 1.99. Those are the tech stocks. Not as bad, but we do see a red open box down candle laying on the weekly trend line. It also is headed down. Derivative oscillators lost some energy. As we look at the 2-day chart, we see it touching but not having penetrated the weekly trend line, and it does look like the Qs is setting up for a crossover. Hasn't happened yet, but has gone negative on the 2-day chart with the derivative oscillator, what appears to be a crossover in the making on the price percent oscillator. And as we go to the 4-hour chart, we can see that we had the penetration at the end of the day on Thursday, the 1st of February, and then in the morning, big down movements on the 2nd on Friday, and big down movements. And the 4-hour chart closed just penetrating the weekly trend line. Again, lots of warning bells there. So that's where we are on the Qs. Again, we'll see how much more of this down movement we see over the course of the next week. But of course, not the time to stay in that trade. We had lots of good up movement from our jumping in point, somewhere about 158, all the way up to a high of 170.95, almost $171 over just the span of those 3 weeks. It was beautiful. Now, lastly, we're going to, well, that's it for the Qs. What we're going to do next is move to the weekly vertical crossover that we had on TLT, which is still underway. Remember, this was an inverse trade. This was a short position, either going in another fund, an inverse fund of the bonds, or, and we've got a great training on that, if you'll go to inverse ETFs, how to make money when markets crash. You can actually find that at chartingwealth.com under training, but we see that we are in a short position once we had that weekly vertical crossover going down back on the 5th of January. We're now completed the 4th week of strong down movement, has done extremely well. The jumping in point somewhere around 126 or so. Down, it's just incredible over just this short time period, down to a low of 119.24. So that is absolutely beautiful for either a put option position or if you were trading in an inverse fund of bonds, the 20-year bonds. So again, absolutely beautiful. Derivative oscillator gaining downward momentum, price percent oscillator gaining downward momentum. That's the nice thing about being sophisticated in your learning, is that you learn how to make money when the market's going up or down. And in this case, bonds going down decidedly. We see on the 2-day chart continued strong down movement, actually the biggest down candle that we have seen for many days. And that was beautiful. That's just the first day of the latest 2-day candle on Friday. Price movement well below the weekly and well below the 2-day trend line, as one would hope in a down trade. And what do we see on the 4-hour chart? Again, strong down movement in the morning, strongest, and then more down movement as far as our Heikin-Ashi average pace candlesticks go in the afternoon. Derivative oscillator gaining downward momentum, price percent oscillator continuing down strongly. Lastly, and of course, that trade, we just keep letting that one run, my friends. What do we see on gold? Well, gold had the weekly vertical crossover going up back on the 5th. Went up for 3 weeks, and this past week it has blown off a lot of that movement. That candle has gone from green to a red spinning top. Looks like it's trying its best to penetrate that weekly trend line. Price percent oscillator has gone almost flat. Derivative oscillator has gone flat on the weekly chart. As we look at the 2-day chart, what do we see? It hasn't crossed over going down yet, but it looks like it's darn close to it. It has blown through the 2-day trend line and the weekly trend line. Again, this is just the first day of the latest 2-day candle, but that's what we see happening. Derivative oscillator is also in the negative. And then lastly, what do we see on the 4-hour chart? Well, with this latest down move in the morning and the afternoon, it does make our 4-hour chart appears to be working again. What do we have to have for that 4-hour chart to work? We have to have movement. We had some down movement and then a bit of a recovery. It was starting to look wishy-washy again. Then the day opened with a strong down move blowing through the 2-day and the weekly trend lines. So it appears the 4-hour chart is back to working for us, and we'll continue to see how this plays out. But as far as those moves in gold go, be very careful now that it appears that this 4-hour chart is actually working. We'll continue to monitor things and watch. We did have 3 weeks of nice up movement in gold with some good profit possibilities. Again, the magic of the weekly vertical crossover. But once you start seeing your weekly trend line penetrated, if you've not already pulled your position, then of course you very much want to look at doing so. Folks, that's where we are as we end the day on Friday, go into the new week on Monday, the 5th of February. We so appreciate you being with us. Continue to follow these markets with us every day with this exciting change of pace. Again, what goes up at some point has to start coming down, and we'll continue to follow these markets on a daily basis, help you figure out what's going on. Remember, if you want to supercharge your training, the way you do that is with your weekly, well, making sure that over the weekend, you fill out your weekly market worksheet. And of course, every day, Tuesday through Friday, you're filling out that daily market worksheet. And for every trade you do, every practice trade, you fill out the trade worksheet. And all those worksheets are available at the website. And of course, to all of our friends that subscribe to our daily market review. You can do that easily enough by just going to our website, putting in your name and your email address, and we'll put you on the list. You'll also be the first to receive all of our new trainings, new chapters from the book, everything we have to offer, plus a discounted plan we have for you at TC2000. That's the charting software that you see us use in our screencast every day. God bless my friends from the whole team here at Charting Wealth World Headquarters.